As some of you know, if you've been watching this channel for a while, you know that I have a new business, and it's the media side of the business. So it's actually the part of the business it's the business now that kind of runs the YouTube channel and has income coming in from the YouTube channel and from partnerships with different software companies, and also like digital products that we sell, everything like that flows now into a different business. So it flows into my Clara Media business. So I wanted to share with you guys today the banking structure that I've set up, which is very simple. But what I like about this structure is that it can grow with a business. So this is really great if you are first starting out and you're maybe just a solo consultant and you're starting to make money and you want to figure out how to handle your money the best, or maybe you have a small team, or maybe you're over $1 million in revenue and you're still growing and you expect to grow much further. This banking structure will work for all of those scenarios I just listed. Now, as you get more complex and as you have more needs, you can start bolting on other things to help you manage your money better. But I want to show you a system, kind of a banking system that works for small businesses. So I'm going to show you guys a graphic that I created specifically for this video because I had it in my head and I'm like, I know how to do this. I drew it out on paper, but I wanted to create a graphic so that you guys can download it, and then also that you can see visually how the money is flowing between all the banks. So I'm going to hop in and show you that and just walk you through how to do all of this and how to set it up if you're interested. But before we do that, I want to tell you about today's sponsor, and that is Relay. Relay is a business banking solution built specifically for small businesses. And when I have set up my bank accounts for Clara Media, I set them up on Relay. And so the structure that I'm going to show you today is built on the Relay platform. It can be built on other platforms as well, but specifically Relay has all the tools to do what I'm going to show you today. So you can set up bank accounts extremely easily. Let's say you have one operating account, you can easily set up a savings account or another checking account or another savings account. You can have multiple savings accounts and multiple checking accounts. You can also actually set up ACH payments out to vendors. You can set up ACH payments out to yourself, to your personal checking account for your owner's draw. How great is that? I just realized that I could do that because I used to, in my other business, I used to like physically write a check and go run it over to my physical bank and get the money in there. And sometimes, I'd get there and they just closed or whatever. And it just, we don't need those kind of headaches in this day and age. Okay, so Relay has all of these online tools that are going to make your life a lot easier. So if you're interested in checking out Relay, you can go to claracfo.com/relay. And then they are also offering for people who are watching the Clara CFO channel and use that code that you will get $100 deposited for the first $100 after you set up your account. So if you open up your account and you deposit money in and the first deposit is more than $100, then you will get $100 matched. So that's pretty great. Thank you, Relay, for offering that for our audience. And if you want to learn more, go to claracfo.com/relay. Okay, so I want to start first by just saying that this banking structure that I'm going to show you today has 3 accounts, 3 main business accounts, and then there is an arrow out to personal banking. But the personal banking is not with Relay, okay? Because Relay is only for business banking. So I wanted to make sure that's clear. But let's just go ahead and dive in. I'm going to show you this graphic, and then I'm going to walk you through every step so that you can see how my money flows in my business, and this structure could work for your business as well. Okay, so here's the graphic that I created, and I want to show you how the money flows in my business. And this, again, can work directly for you as well. So first thing is I have 3 business accounts. One, and this graphic here stands for the account. So there's the operating account, and that's a checking account. And then I have a tax savings account, and then I have a long-term savings account. Okay, so the operating account is going to be the central hub, and then there's spokes coming out of the hub. Okay, so the operating account is where money, all the income that I make goes into that account, and then I pay things out from that account. Okay, so that structure works really well, even for much larger businesses, to have one central hub of an operating account. Okay, so what I do is that The operating account really doesn't have a lot of direct expenses coming out of it because I also use a rewards earning credit card. And so all of the little expenses that I have in my business, like my software, my office supplies, utilities, travel, meals, et cetera, all of that goes on a rewards earning credit card. And I do a rewards earning credit card so that I can use it for things like travel and, redeem it for other stuff. But I use this credit card because I know I have enough cash to always pay off my credit card. So I don't put a lot of my small expenses in coming out of the operating account, because this consolidates all of those tiny little, software recurring charges and the random meals you have here and there and the airfare that you needed to book and all the little things don't hit this operating account. They all hit the credit card instead. And so that keeps the operating account a lot more clean when you actually look at the transactions, and it keeps it just a little bit more streamlined. So you have the one credit card payment that goes out every month to pay off the credit card in full. Now, I'm a very responsible user of credit cards. I never incur interest on my credit cards because I always pay them off in full every single month. So the total amount due is what gets automatically set up to pay off that total amount due. Because I think of using credit cards like it's my direct cash. So I don't buy anything on my credit card that I don't have the cash to go and pay it off, okay? If you are not that type of credit card user and you are a person that is, building up your debt on credit cards and you can't do it any other way for whatever reason, or maybe you aren't offered any other kind of loans or something like that, I would make sure that you're looking for a credit card that has the lowest interest rate possible, which is probably not going to be a rewards credit card. Okay, that's a little aside. That's not really a topic of this video, but rewards credit cards sometimes have the highest interest rates, and part of it is that's how they can give the rewards, because some people are not paying them on time. And so because of that, you want to find the lowest interest rate credit card you can get. Now, if you really are very irresponsible with credit cards and you're always spending more than you have, I would say maybe don't use a credit card and just run everything through your operating expenses, okay? Operating account. So what's going out of the operating account is going to be my credit card payments. And then also I have some things that I can't put on the credit card. For example, the rent of this space, the owner does not want to have a credit card charge because he doesn't want the fees. And I don't know if he knows how to accept credit cards, but he wants a check or an ACH directly into his account. So that goes directly out of the account. And the great thing is I can do that directly in Relay. I had been doing that through Melio with the old business, but now that I have these recurring payments I can set up, I'm looking over here specifically on my Relay account, I can just set up a recurring payment to my landlord. So that is one of the next things that I'm going to be doing, because I just realized I could do that a couple days ago. I'm going to be doing that. And then if I had payroll, I don't have any other employees on payroll for this company just yet, but any payroll would come directly out of the operating account. And then any contractor payments. So if I hire somebody to do something, I can pay them directly out of the bank account. Again, I can set up a direct ACH, which is super nice. I can also send a check through Relay. Okay, so that's kind of like the business operating expenses. That covers, what you would see kind of showing up on your P&L. Now, we didn't talk about the money coming in, but really any money in the business that the business earns should go into that operating account. If you were to get much bigger and much more complex, or if you're giving your account information to customers so that they can pay you via wire transfer, ACH, I would recommend having one extra account, and that would be your income account. And that would be a separate account number and routing number. Well, it would be the same routing number if you're using the same bank, which you should be, but it would be a separate account number. And then you can give that to your customers. And then essentially every time you get paid, you just sweep that money, move it right over into the operating account. What that does, it kind of separates your risk of having your operating account that all your stuff is flowing in and out of, that somebody, gets those numbers and does something bad with them, okay? So if like in this situation, the way that I get paid, I am not worried about that because I'm sending invoices directly out of QuickBooks and getting paid. So that is not a concern for me. So that's why I have this simpler structure with just the 3 accounts. Okay. But all the income that I have is getting deposited into this account, operating account. And then these are the amounts going out. So one very important thing is to be saving for taxes as a small business owner because you don't want to be surprised and not have the money when your CPA tells you that you have a big tax bill. So we are big proponents over here of not only saving for your taxes every single month, but then making your quarterly estimated taxes, which are required by law. They are required by the IRS to be making quarterly estimated taxes. So if you think you're going to owe taxes, then you need to be paying on those quarterly estimates. And I have lots of videos showing how to do those quarterly estimates. But how I think about my tax savings account is at the end of the month, I run my profit and loss statement. So we just closed January, or January just finished. When the financials have been done for January and my bank accounts have been reconciled, I will look at my profit at the end of the month because I am a cash basis business, and I will multiply that profit number times 0.3, which is 30%, and that will tell me how much money I'm going to transfer into the tax savings account. Okay. Now 30%, I have it at 30% for a number of reasons. First, this business is an LLC and I'm going to have to pay self-employment tax on the money that is being earned because I'm still being taxed as a sole proprietor. And also I know around what my effective tax rate has been in years prior. So my effective tax rate has been closer to like 20 to 22%. And so I've kind of overestimated here a little bit. I know I'm going to have to pay that self-employment tax on top of it, but I'd rather oversave a little bit in this tax savings account and then pay out my quarterly estimates when I do those calculations. And then if I need to, if I've oversaved, I can just move it back into the operating account at the end of the year. And I can make adjustments there too. If I realize, I've way oversaved, maybe I had some months that were actually in a loss and I don't need to contribute to that, that's okay. So once the tax savings is there, then every quarter, like let's say I've been saving for January, February, March, I can make that April 15th estimated tax payment. And then I save for April and May, and then I make that June 15th estimated tax payment, and so on. So really, you can make your tax payments directly out of this tax savings account if you would like to. You could, it kind of depends on what's the easiest way to pay it. You can pay your estimated taxes if you are this pass-through income or pass-through entity like I am. You can pay your estimated taxes directly out of your business. You just need to record it as an owner's distribution or an owner's draw because the business has kind of paid that on your behalf. Because a flow-through entity, you need to like pay your taxes out of your, personal earnings. So you can just do that by recording it directly in your accounting software. So you can pay that out directly to the IRS. And then, so the taxes is like this nice little system that is buttoned up and very easy to do, okay? And you're not ever gonna be in a place where you're like, oh no, I don't have anything saved for my taxes, because you're ideally doing that every single month. The next thing I wanna point out is this long-term savings. So long-term savings for me, because I'm not like saving for anything like really big, like any equipment purchase or anything like a building purchase or anything like that right now. Long-term savings, I'm just trying to build up a good like emergency fund in the business. So I have put this to be a range between 5 and 20% of profit. So this will be a little bit more flexible for me because I don't have super firm, like has to have a certain amount of money in the business because I have income coming in from other sources. So I don't need to have a huge emergency fund in this business. So I'm going to let this be a little bit more of a difference with the other spending in the business. Like if I want my owner's draw to be a little bit higher and I can put like a little bit less in long-term savings, I'm gonna be okay to do that every couple months. But if my owner's draw is just fine for my personal needs, and then I might have some extra money to throw into longer term savings. So this is kind of the flex account for me, more so than my owner's draw. I'd rather have my owner's draw be really consistent every month and then flex up and down on long-term savings. But if your business is at a place where you do have a savings goal, I would say that you could make this more of a permanent fixed number that you want to put in every single month, and then maybe make your owner's draw the number that's a little bit more flexible. So if you really need to put your long-term savings in, then that means maybe your draw is a little bit lower, kind of depending on how the month shook out. Okay. And then lastly, I want to talk about the owner's draw into personal checking. So again, I am an LLC taxed as a sole proprietor. I'm not on payroll. So the way that I get paid as an owner is I take a draw from the business and that goes into my checking account. So like I said, was able to set this up on Relay where I can literally, I'm looking at it right now. If I wanted to pay myself right now, I can just click on it and I can click make a payment and I can set up an ACH to get there in 1 to 2 business days. So love the functionality here on Relay for owner's draws. Like I said, with me, I like to make my owner's draw pretty consistent, and then I make it, I basically kind of forecast out what I think my income is going to be, and I forecast out what that profit number is going to be, and I forecast out what the savings amounts is going to be, and then I set a reasonable owner's draw compensation, and I plan for expenses as well. This is what I think is reasonable for the business to pay me for, after all these other, cash needs are met. Okay? And then I do it all over again the next month. So I hope that this brings a little bit of clarity to how this can work. High level, income comes in, operating account, credit card gets paid, rent gets paid, contractor payments get paid, the owner gets paid. You save for taxes, and then you save for your long-term savings. Okay, and so that is it. I will make this available to you if you would like to download it, and I will also put a black and white copy if anybody wants to print it out. But I think that this is just simple enough. Everybody should be able to understand. Everybody should be able to set this up. And if you have any questions, please put them in the comment section below. I'm going to make this available to you in the description box below. If you go to claracfo.com/bankflow, you will find this there. All right, so you can grab your copy. Well, thank you guys so much for being here, and I will talk to you later. Bye, everybody.